Hey, it's Vinny here today with Emanuele and Arny. Excited to have you guys back on. We've just jumped right in, I guess. We've just lived through the stock market's worst first half in the last 50 years. Congrats, we're all surviving. S&P 500 down nearly 25%, NASDAQ down 35%. Some of our favorite names, I'm sure, down much more than that. We've got lingering inflation. Jay Powell said it was transitory, to which inflation replied, hold my beer. What's your guys' perspective on everything happening? What's your game plan? Where do you think we're going from here?
Let me get started, Arny. I'll jump in first.
All yours.
The numbers that Vinny quoted, Vin, if I may ask, you're quoting them from their high.
This is just year to date.
Oh, year to date drops. Okay, so relatively the highs I think happened in November. So fundamentally, I think that's where perhaps our first problem is, that we sort of claimed that that money was ours in the highs. We thought this is my new net worth, and myself included. Trust me, I'm worst. I'm preaching to myself here. So I think that's where my fault, and maybe a lot of other people's fault, is like we thought we had that money in the bank, really. So when we're saying that those year-to-date highs, that's an issue. Technically, I checked the S&P quickly. From I think the pre-COVID crash, we're 6% higher than that. So I'm just wondering if there wasn't the whole boost that we had of like tens and hundreds of percent. If we just went up steadily 6% in the last 2.5 years, we'd be like, oh, it's pretty low. Not the best return, but okay, we're up 6. Like technically, I think somebody could look at it like that, which just it's a heartbreaker that our net worth's doubled, and then they got cut in half within the last couple months. So that's the way I see it. I think it was just like a sort of a false perception that we had.
Yeah, things definitely got inflated, and it's easy looking back now in hindsight. And another thing I've been paying more attention to is just, looking at revenue numbers too, just getting ready for earnings season here, potentially the next domino to fall. How much, goodwill can we really put into the last 2 years? I think a lot of these numbers were kind of a fugazi, a one-time thing. And maybe, like you said, if we go back to 2019 numbers, what these companies were pulling in is kind of a better gauge to kind of reset, go from here. And maybe there's some gradual growth compared to 2019. But I think in many cases, they're not going to get back to those 2020, 2021 numbers that we saw. What do you think, Arny?
Clearly, what we are living now is what in economics is called you have more pain for something that is lost rather than for how happy you are when you gain something. I think this connected to what Emma said. If we just went straight plus 6%, it would have been way less painful. But now we have to deal with our broken expectations, and that is painful. Broken expectations almost everywhere in all the sectors, because we can talk about both big techs with Apple, Google still on the sky compared with where they were a couple of years ago, and also with some companies that, despite they are heavily beaten, you look at the valuation and you say, okay, they are very down. Are them actually really cheap? No, it's not always the case. And right now, with interest rates so high, actually everything changes, because a couple of years ago, you had the interest rates starting moving from 0.5, and you see the Nasdaq crashing, and you say, okay, but is it really a problem? My perspective was, it's not really a problem. But right now, the interest rates along the curve are 4, 5, 6, not 5 towards 4 towards 5%. Actually, it's like okay, but if I want to invest, is it really that convenient to invest in equity compared to fixed income? Because that changes all the equations in finance. Because once the risk-free alternative actually brings you a valuable yield, and 4 or 5% is a valuable yield, equity must give you much more than that. And at the current valuations, it's not already certain that equity can deliver that valuation. And that is particularly true for the most volatile stocks. That's why I'm heavily convinced in what I'm doing, but I'm also considering, okay, the cash, rather than deploying it immediately, I like the idea of having also my ETF in the 3-year treasuries, because at worst, let's say a disaster happens, that stays there. Actually, it could even improve in value, because if something strong happens, there's a phenomenon called flight to quality, and asset managers jump on the safest assets possible, and the treasury short term is the safest. If that doesn't happen, it means everything just goes fine.
Yeah, that's a lot of great points. And, I've been speaking to some people and kind of thinking along the same lines. Even, CDs are starting to pay upwards of 4%. And with the rates, there seems to be no signs of slowing down anytime soon. At some point, yeah, how much longer can you justify buying the never-ending dippity dip when you could get 5% guaranteed return? It's starting to seem better and better.
Well, like I said, look, in the last 2.5 years, I said the S&P was up 6% when I checked before. Any type of, in Canada, we call them a GIC, a guaranteed investment certificate. You would have done better, right? Well, it depends on the rates. Back then, honestly, to be fair, the rates were less. But now, if we're talking that the rates that they're offering you guaranteed risk-free are 4% plus, it's looking pretty good.
But I have to say that if you were invested in bond when everything was on the top, actually you would have been hit in the same way as equity, because basically you were investing in bonds yielding 0%. So you had no potential upside. You only have you only had the downside, and that downside happened. And I saw this morning a nice statistics that 2022 is among the 3 years from 1926 with both negative bonds and negative equity. So it's like a unique combination, but that comes because bonds couldn't become a hedge because they didn't have any upside left once a 10-year bond gives you 0.
Yeah, we're really facing a whole different animal here. And as far as the stocks that I've held on to here, I mean, at this point, yeah, I'm really, we were kind of talking a little before we started about, we kind of got spoiled with you buy something and you're used to within a few weeks, you're seeing progress. I've kind of just come to the conclusion, making my peace of whether this takes 1 year, 2 years, 5 years, got to just hang on for the long haul here with those, stocks that you have high convictions for. I mean, the Teslas, the Palantirs. I mean, who knows? When things turn around, all I know is it's not going to be a V-shaped recovery this time. It would appear.
Vinny, I wanted to, since you mentioned earlier on when what was the term? Inflation said, "Hold my beer," to Powell. But I want to call out perhaps some negligence from their part, because not so long ago, when they were calling it transitory, and the Bitcoiners were having a field day mocking basically this word transitory, they were claiming that inflation was transitory. I believe it was last summer of 21, more or less. And they hung on to that for some months. But now we're in this disastrous inflation and rates going up nonstop. And I don't know if they gave an end in sight, but it's just oh, okay, we'll have a meeting next month, and you guys bet on the side if it's going to be 0.75 or 1%. It's really unprofessional. I don't think that makes any sense. I don't understand how it's not established in advance. For example, if it was me, if I had my way, and guys, tell me where I'm wrong, but I would say, if I was them now, I would say, listen, we're gonna, for the next 6 months, we're gonna look to increase it by X amount. Let's say small amount. I would do gradual increases, but here, 6 months guaranteed. In 6 months, I'll reassess, or I'll give you updates in 4 months, 5 months, but we'll see. But this is our plan. And until inflation hits this amount, then we'll start thinking, they got to give some sort of guidance. I'm not sure if the guidance is clear. It's just oh, we're going to show up one day, and now even the market's crazy that they interpret his word or the tie color he's wearing, and they're like, okay, minus 10% today. It's I know we want to be long-term investors, but it's almost unfair to play this game when it's so exaggeratedly volatile.
I think that's the
Yeah,
part of the game.
Go ahead.
I mean, imagine the old market was okay, we give you the guidance. Every year will be 6% guaranteed. I mean,
yeah.
How all journalists, all the people that live commenting markets, well, how can they do? How can they live? we have to think that it's not only the interest of the central bank per se, but there are also political agendas, and there is also finance on another side that benefits from chaos.
Yeah, and it's funny, like everything you said, looking at it, it does seem like a very inefficient process. It's very backwards looking. I mean, even the CPI it's a lagging indicator. You'd think in 2022 we'd kind of have a better pulse on things and be able to react more quickly and effectively. And that's the whole thing. Yeah, it's just a very the way the Fed operates, and with these rate hikes, it's reactionary. They're not being proactive. Yeah, as far as like being all over the place, I don't know. It's like Wall Street. The whole game is to try and shake people out of their positions, because if this is something I was going to ask you guys. Like, I was, for a few months, I started reading the Wall Street Journal like earlier in the year, just trying to get a grasp on what the hell was going on, and while I'd occasionally stumble upon some gem articles, I just found the vast majority of it to be, like most of the mainstream, it's just very short-term focused. It's a lot of noise. So I stopped reading the papers because I felt myself potentially drifting to the dark side of falling into that trap of trying to predict and, when is inflation going to stop? When's this going to reverse? Nobody knows. And I finally got back to, reading some long-term investing books, which I feel like has definitely helped me get back to thinking long-term, realizing this is going to pass eventually, whether it takes 6 months, a year, 3 years. And so if you look at it that way, I mean, as a long-term investor, it's a great time to find those great companies at a good price that will Emanuele 20x over the next decade, hopefully. What do you guys think? Like, how are you guys doing? What are you finding that helps you guys when you're watching these stocks drop 50%?
I have to say, the awareness of the financial industry being set in a way to shake the weak hands is helpful, because once you understand that, or you detach, as you said, or you try to spot, okay, what actually they're trying to push. Is there any major flow in what they actually share? Because, for instance, a couple of years ago, I was having a very strong position in Apple. I was almost all invested in Apple because I saw the inflation narrative hitting tech stocks, which was flawed, because if there is one company able to transfer the higher prices both to consumers and to suppliers, is Apple. But the narrative was a tech down because of inflation. So understanding the rules of the game is very helpful. But I would say even more important is being invested with a portfolio that makes you confident because you know the companies well, or you are extremely diversified and then you just don't care because something will go fine. But if you have a more concentrated portfolio, you really need to know the companies and knowing, okay, how resilient are these companies to shocks? Are the revenues recurring? Are the revenues vulnerable to a shock? Is the financial structure strong enough to say, okay, let's say a very bad year happens. Does the company go bankrupt, or is just, okay, this a year, rather than earning 100, we get a 70, but it's still fine. The financial structure is still intact. And for my tastes, I realized how valuable are the recurring revenues. That's why I see in Palantir the combination of all the things I like, apart from stock-based compensation, but that's another topic. But if we exclude that, I see in Palantir the thing I really like. A capital light business, able to generate a lot of free cash flow without needing a lot of cash to grow, because it's only engineers, product, delivery. You don't need to have to build manufacturing plants. So even if rates are super high, you just don't care. You don't need to issue debt to grow. Recurring revenues, because right now we think, okay, all the economy contracts. But if you already have a contractual revenues that tells you, okay, in 1 year, 2 years, you will receive these revenues, it means that the worst that can happen is that rather than growing 30%, you grow 20% because you struggle more with the commercial activity. Is that a real issue? Well, it is annoying, okay, but it's not a problem for me. And even more, that these kind of companies like Palantir solving problems actually benefit from companies, government having problems.
Yeah, so I guess he's saying there it's a type of a recession-proof business on Palantir. Vin, if I may ask you a question. Stock, no, exactly. No, but it's true, exactly. Stock, no. Stock, no. But if you can understand the company, then you know, I don't know. I think even the recession-proof stocks still show weakness in the worst of days. So I wanted to ask Vinny a question. Vin, now we're revisiting Tesla's revisited the 52-week lows. Let me ask you, when we hit those same lows in June, from June until now, where we're in October, we hit, let's say, pre-stock price. We went from the 600s almost back to the 900s, I think, if not already the 900s. It didn't cross your mind to say, oh, you know what, I can't handle this roller coaster anymore. I'm actually, you know, did you ever, your long-term ever get shaken? You're like, you know what, I'm going to cash out at this 900, 800, 900 price and like save myself.
Yeah. You know, it was definitely the beginning of the year, I think it was more frightening because kind of like how you guys said, like you just started to assume that this was reality. This was your net worth. And then things are dropping 50%. No, I never sold because, you know, thankfully I have just looked at, okay, let's take a step back from all this. And this is the other thing. It's like we're all too caught up on the stock price, and that's part of the whole game to shake us out. And it's the most useless metric, right? So if you're looking long term, the fundamentals have exponentially improved.
Exactly.
And that just each quarter here, you know, tiny little blips on the radar maybe, but in general, the trend is it's getting stronger and stronger. And yeah, meanwhile, the stock is going down and down. So to me, that's a buying opportunity. So, you know, I'm buying a little bit here and there. So I haven't capitulated. I don't plan to. And I've just accepted that, like, I might not get back to, you know, my personal all-time highs for years, but I'm okay with that because I think it will be worthwhile 5 years from now, maybe even 10 years from now, however long it takes. You know, it's, again, goes back to your conviction in these companies, goes back to looking at the fundamentals. And if those are strong, if you believe in the companies, you know, you have high conviction or you're diversified, whatever helps you sleep at night, in the long run, everything will work out. And you got to like resist this urge, because yes, this is the mistake too many make is, you know, buy high and sell low.
Yeah, it's too easy to do so. I appreciate your outlook. Like last time you mentioned the similar aspects, and it's good. I'm glad that you're able to stay strong through these. Should we talk in that? Oh, let me ask you one more question actually about the Tesla price. Do you have a way? Because like I've talked to Arnaldo about it in the past, and Arnaldo's like a metrics guy, and on some metrics he says expensive, but maybe not now, but maybe in the $700-800 range. Are you looking at it in a simple way like I do and used to? Is listen, Tesla's the best company. It's going to outperform everybody in the next 10 years. That's it? Or do you ever look at any particular metrics for Tesla, a PE ratio or any other type of ratio?
Yeah. So yeah, that's a great question. I mean, there's definitely a lot. There's a lot with Tesla. There's a lot of maybe price to trust ratio because there's a lot of stuff
it in kilos?
in tweets.
Yeah. There's a lot of things that sound great and could be huge revenue drivers in the future, are not making any money yet, aren't there yet when it comes to these things like full self-driving and the Tesla bot now, all kinds of crazy stuff that Wall Street is never going to assign any value to. In fact, they're probably, you know, it's negatively impacting their outlook on the stock. So the way I've kind of been trying to look at it is that's all extra to me. I mean, full self-driving, I think it's getting there. And what reassures me with that is we're seeing the improvement. It's constantly getting improvement, getting better with every update. I'm sure you have full self-driving, right? With your Tesla, you could probably attest to that.
Exactly. And I just got a new update yesterday, but the one I got maybe 6 weeks ago was really good, the 69.22. So yeah, it's doing well.
So with that, you know, I'm seeing it get better. It's not just like, this is something we're going to do in 10 years and you just have to hope. We're watching it get there. however long it takes. As far as the Tesla bot, that's a little further out, but I can see it. It makes sense. I see the very fast progress they made with Tesla AI Day. I thought was incredible, just in 6 short months since they really, announced this, how far they were able to get. And I can see the application for it. But obviously, especially in this macro environment, I feel like we have to work with what we have, and not, even factor in these future potential things. So when I look at it that way, I still feel great, because what I see is this company that has mastered producing electric vehicles. They have, I think, 69% of the market or something still. And I keep hearing about, everyone's going to catch up, everyone's going to do this. It still hasn't happened. And so at a worst case scenario, if nothing else happens here, I see with Tesla, they have the recipe down. All they need to do is rinse and repeat. They've got 4 gigafactories. If they didn't build another factory and we just work off what we already know, these factories on average, I think they'll get a lot further, but on average should be able to each produce, let's say, around 1 million, some more than others. Fremont's a little smaller, obviously, but I think Berlin and Austin are capable of much more. But so if we just apply the numbers that they currently have, they're doing about 1 million a year right now. And you take the numbers, the average selling price, let's say around 50,000. So if they can do 4 million cars, that'd be 1 million for each factory. We're talking 200 billion of revenue. And then you factor in their insanely high automotive gross margin, which is around 30%. That, I mean, a couple luxury brands might be up there, but the main players are not, who are selling, millions of cars.
Volume, yeah.
So then you're looking at like 60 billion in gross margin just from that. And so what I see then is this business is just going to continue to improve. Obviously, we've seen with Tesla how quickly they continue to improve. They're going to get more efficient, not less, right? I think even if prices have to come down eventually, I clearly they don't have a demand issue yet, but that's where this constantly improving agile culture is going to come into play. And then, so what I see is they have that down. Nobody else has yet proved themselves on that, serious mass scale yet. And so then I'm confident in them dominating that. And then they're going to be able to funnel this money into, we're seeing energy storage pick up. I think that's going to really start to, snowball here, and all these other projects that, it's all going to come full circle is the way I'm looking at it.
Yeah, exactly. I hear you. Arny,
Guys,
thoughts on Tesla?
Let me ask you, yes, the crucial question, since I see there is an activism movement around Twitter shareholders, buyback or not buyback. Gary Black even sent an open letter. Please buy back. Please.
You took it as a beg. Oh, I didn't know that you took it in that way.
That's a
and I know
beg,
you shared previously that you didn't think buyback was a good idea for Tesla. So Arny, why don't you kick us off?
Well, I would say I love buybacks. I think that's they are an extremely useful weapon for companies, not for all companies and not for all stages. Tesla is getting there, very close to the moment where, okay, now buybacking shares really have sense, especially now that after the previous campaign from Twitter activists, they finally got the investment grade rating for the bonds, and that is very beneficial if you want to buy back. But you need to exploit the moments where you can issue debt at a very low yield, maybe not now, because the full power of buyback is when you issue debt, basically like Apple at 0.1%, and then you use that cash, that is basically just additional cash you will pay in 5-10 years to repurchase shares that that will be much more valuable in the future. Right now, the price is dropping. The price is relatively appealing. I would say is not insane yet, especially given also the rates and also given the valuations that are around. So I would say would not be a bad idea. Is not the priority as these people are begging, especially because I think most Tesla investors underestimate, and now I ask you because maybe you're more into Tesla, but I give you my perspective right now. What is very underestimated of Tesla is the potential crash of the auto market, starting from the used market, that is very linked to the debts on the auto loans. That is a very big market, not a very healthy market, because with low interest rates, many people got into debt just to buy the car. Their financing ability is maybe not be that good. So I see huge potential risk there. Maybe not related to the business per se, but on the stock, because if the storms happens, it takes down everything. So what's your perspective on that?
Yeah, and I would agree with you on the buybacks. I think it's short-sighted. I agree that eventually it makes sense, but why don't we, let's see how bad things can get here, because Tesla's one more China factory closure, great recession, supply chain issues from needing the cash. I'd rather we wait a couple more years until they have more cash than they know what to do with. And also the opportunity costs. I mean, I'd rather see them put that money toward, this guy Elon every day spitting out new ideas, and whether they want to acquire a company, whatever. I think that will yield a much better long-term result than just doing the buybacks now. Because and the other thing, if they buy back stock now, that's not going to matter if the macro continues to deteriorate. So then they're going to light the money on fire and the stock will still go down another 50%. So I'm with you on that. I don't see a reason to do it right now. And yeah, I mean, that's definitely a risk. But, I was reading how a lot of that used car market that's collapsing. I think more so what's going to happen is for gas cars. Yeah, like they're really in trouble. Tesla, at least their prices are so high that two things. One, they could start to pull those demand levers if they need it. They could start bringing the prices down. I'd have to think that every few thousand they dropped it, they would free up a huge new market of people. And the second thing is that I feel like, there was an article on this that you go back to even the Great Recession, Ferrari was still doing fine because the people who are buying these luxury vehicles are a little bit more sheltered to what's going on. And, the people who are really going to get hurt aren't the people that are buying Teslas at $65,000 anyway. So I feel like they do have a couple things working for them, but yeah, I mean, there's definitely risk. I mean, who knows how bad this is going to get. I mean, it doesn't seem like it's letting up anytime soon. And then there's obviously things going on around the world that are just exacerbating that, like what's going on in Ukraine with just no end in sight. I mean, if things would start to move toward the positive direction, if we got some type of, end to that conflict, I mean, everything would help a little bit with inflation, just all the problems. But I could see it go the other way too. And then yes, there is definitely a high level of risk right now.
I like Vinny that you mentioned Ferrari, because I spoke last time with Arnaldo about this. We were talking about Ferrari being a recession-proof business along with Moncler, and I just proposed the thought that maybe Tesla is a recession-proof business, or could be. Maybe it is. We'll see, right? Only time will tell as we go through the recession. So I noticed Arnaldo, you appreciated when he said that Tesla can make the decision to lower their cost prices. But I was just thinking, what happens, Vinny, in the same way if they would raise them? Is that so crazy to increase profit on those cars? What do you guys think if they would actually raise them? Is it another possible solution?
Already did it.
Yeah, they're doing it and they're still selling. So
yeah, and
maybe they have that flexibility.
When you factor in all these EV tax credits now that are coming into play, I mean, they probably could keep raising them, and they clearly just, the supply is not there yet to meet the demand. Even though the numbers are coming down to an extent, yeah, they could probably do that too. So I do see, like we had said earlier, companies that are recession proof. I think to an extent they are. Again, stock price is going to get destroyed, but fundamentally, yeah, they'll do fine. They've shown they have that pricing power. They have the branding. I mean, the guy can get on Twitter and sell burnt hair for $100 a bottle. Like,
yeah,
they'll find ways to make money.
Exactly.
And they clearly, the other thing they have going for them, I think, is still the relatively low market penetration of EVs. I think is still low single-digit percentage globally. And everyone who's Googling an electric car after they see, the Super Bowl ads or any advertisements, one way or another end up on Tesla's website because they start comparing specs. If you have, some level of intelligence, I mean, people, it's just free advertising. It all leads to Tesla. So that's another area. They're saving billions right there, not having to advertise, and they're getting the customers anyway. So yeah, I think that it is showing thus far that it is one of those stocks that is recession proof. Or
And
not
I
a
have
stock, but a company.
Thing.
Wait, one more thing, Arnie. Sorry to cut you off. I just wanted to touch because he sent the burnt hair, and I figured I didn't look into it too much. I saw it, and I'm like, he's just showing off. He's like, I'm the boss. I could sell the stupidest thing that exists, and you guys, you'll buy into it. And I wanted to tie that back, just the boss move in terms of the buybacks. Not that they have to. I don't even think they have to issue debt. I don't know. I've heard that issue debt to buy the buybacks, but if it's not necessary,
That's
they have the cash.
Smartest way to do it.
To do it. But let's say they have a lot of cash. If they're still growing their cash account quarter to quarter, even if it would be a small amount, like maybe I'll give a bad example, but Nvidia, they started with like a 0.01 dividend, but it's like, it's a stupid amount, but at least it's like, oh, okay, at least they show some confidence. So just like Elon showed that he's a boss with selling burnt hair and selling it out in like an hour, he could the same way do a small amount of buyback. It doesn't even have to be 10 billion. It could be like, okay, we're doing whatever,
just for the signal.
100 million, just for the signal, saying like, hey, I'm in control, I'm the boss, and the stock's fine. Shareholders, guys, don't panic. Things will be okay. But Arnie, up to you.
That could be an idea. Well, it's something similar to what we said about Palantir. It would be actually nice if insiders just showed confidence.
Exactly.
So for sure, that would make shareholders happy. Maybe that's not their goal. Maybe they want to see how far the craziness can go.
Yeah.
My question was more, how feasible do you see that Tesla would start spending in advertising? Because when you were talking about the Super Bowl and so on, I thought, okay, let's say like something bad really happens to the automotive sector. Because now, I think right now, the market in general is underestimated the real risk for the legacy automakers. Not for Tesla per se. For Tesla, I think right now, it has only a price risk. We can argue on that, but the business is really, really strong. But the other automakers are not really strong. And right now they are facing a coming slowdown on sales that were already bad. The margins are already compressed. But for them, it's difficult to be operatively profitable. And now with higher interest rates, everything becomes more difficult because they have strong debt, and the financing arms find it harder to push people, hey, get an auto loan at 8% per year. Gosh. So what if something that happens like a super crash, then Tesla would say, okay, now we start spending in advertising. Possible? Would you appreciate it?
I still feel like they've made it this far without having to advertise. They're never going to need to advertise because
they don't need to advertise. I don't think
they don't need to. But I mean, for argument's sake, yeah, that could be another avenue. If demand really fell off a cliff and they needed to, it's an option. I don't think they're ever going to need to. I wanted to make one last point with the buybacks before I forget. I feel like the problem is if they were to do a small amount, it's just not, I mean, it could signal some confidence, but you have Apple who's doing 20 billion in buybacks a quarter. They bought back 80 billion in stock and they're still getting clobbered. So it's like, what's the point? That's the way I'm seeing it. And again, I just feel like there's better use for the cash. Yeah, as far as, advertising and the other auto companies, yeah, they're the ones who are going to be in trouble. It's interesting. If you just look back to I think 2015 or 2016 was basically when auto sales peaked for a lot of these companies, GM, Ford. I don't think they're ever even going to get back to that number because Tesla has taken that market share already. There's a new entrant that didn't exist. So, if GM at their peak was able to sell 8 million cars, it's just not possible that they're going to get back to that point, And now you've got, even in addition to Tesla, how many tens of other EV companies have come onto the scene as well.
And if I may jump on the advertising, I like when I said they don't need it, and I can't even imagine, unless Arny, you have a better idea, then like what are they gonna do? A generic television commercial with like the happy couple and a dog in the back seat driving down like the California freeway? Like who doesn't know a Tesla? Who? I almost think they are advertising without advertising, if that makes any sense at all.
Well, actually, they are advertising, but we are not really pushing that advertising because the YouTube videos, actually how the Twitter is managed, that is intrinsically advertising.
Free advertising.
But yes, they are only leveraging on the free stuff. But it means that the optionality of actually starting pushing if it is needed is there. It's no different from Palantir, that up to now they grew without a sales force, without being participating to many events. It means that right now the opportunity is there that the other competitors are suffering. They now just say, okay, guys, let's spam advertising even on YouTube. Before watching a carp video, you see carp speaking as an ad.
Oh, I have the YouTube Premium. I didn't notice. They're advertising on YouTube.
The interview with Druckenmiller, they cut some 10-20 seconds.
Okay.
And they put it into YouTube advertising.
Oh yeah, is that
I
scary?
didn't see it, but
why are they targeting the YouTubers now? That's actually, I'm wondering. I'll check it out, the video, but it's scary. It scares me on the first glance.
I think they're not really targeting the broad audience. They want to build on awareness on one side, but they want to show that they're strong and they want to attract the talents. Because right now, if you think of it, the only bottleneck Palantir has is talents. For Tesla, you have the capacity that is determined by the Gigafactory. Once the Gigafactories are fully operative, to ramp up the production even more, you need to build another one. With Palantir, the only bottleneck is having talents that help you sell, deploy the software, and that's it. It's all about people. So if you can attract the right people, not overpay for them like an investor, because when the bubble was very high, start the entry-level engineers asking for $500,000, that was actually hard. But right now, everything deflated, so they could attract good people at a good price. They are basically investing in talents now.
Yeah, so I guess shifting over to Palantir, I know we had a few questions about that too, but Palantir, they just got that IL6 clearance. That's huge, puts them among the only other two companies that have the IL6 clearance, those companies being the behemoths, Amazon and Microsoft. And the IL6 is a strict security and compliance standard required to process classified data for cloud-based workloads. Do you think that, is this a game changer for Palantir? Have you modeled out if you think it'll lead to a lot more government contracts?
Well, I don't think that in 1 quarter or 2 quarters, everything changes. But for sure, that is a strong signal, because as you said, Palantir shows that a tiny 16 billion companies can achieve results that up to now only two behemoths of 1 trillion, actually more, almost 2 trillion achieved. Okay, that is not maybe very core focus. We can argue on that, but there is this discrepancy that at least is worth highlighting. Not a game changer in the very short term, because everything in Palantir works. Something happens, you start seeing maybe some impact in 6 months, 9 months. So for sure, it is a strong signal, not only for the government side in the US, but also from outside the US, because if you achieve the highest level of security in the US, it means that you know how to deal with very, very sensitive data, and that could help the sales in the government, also in the NATO countries, excluding the US. And not only, actually, because also for the commercial side, we can argue that some companies don't want to deal with a company that deals with sensitive data. But on the other side, it means, hey, when we talk about cybersecurity, control on data, these guys, know what we're talking about. So I think that is a strong signal. Is not that automatically generates revenues, because to generate revenues, you don't sell the certification. You need to access to projects, contracts that require that standard, which means that potentially huge contracts could be achieved when sometimes the Army has $15-20 billion contracts. Like Microsoft gained a 15 billion contract last month for HoloLens, or something huge. I mean, basically the size of Palantir. So potentially Palantir could get some huge contract just because of that. And for sure, it works as a signal for things that could come.
You got me thinking, it's funny. Yeah, that was one of the criticisms of Palantir. They handle sensitive data. People don't like the government end. People don't like that the market is limited. They won't work with Russia. They won't work with China. Well, the past years kind of showed us that ended up being a strength for them. I mean, look at they saved a lot of face. All these other companies operating in Russia had to shut everything down. If China goes next, I mean, you see a company like Apple is slowly starting to hurriedly pull their operations out of China as far as production, shifting over to India. Companies like Starbucks having all kinds of problems over there. And obviously with these lockdowns that are seemingly unending, maybe they were onto something, and avoiding certain markets ends up being a strength for them.
Yeah, huge.
Well, and by doing that, they create a precedent that companies like Google, Microsoft, that now are, let me take the word, compromised with working with regimes. Now they can't really go back, because they showed the intention, and actually inside the employees don't want to work with certain level of projects with the Army and so on. For instance, Palantir just took from Google a huge contract called the Project Maven, which was very controversial because consisted in using machine learning to help drones targeting.
Yeah, it's interesting. This is really interesting stuff going on in the US, where you've got all these companies don't want to work with the US government, but they have no problem handing all the data over to the CCP. It's amazing. I mean, yeah, if globalization really starts to crumble, if another domino falls, like this really could be a huge strength for Palantir. We had a few questions from Twitter on Palantir. How is Palantir? Is it true that they're able to deploy the software to their clients in a much shorter amount of time compared with other solutions? Is that true, that it would take them, months or years, and Palantir can get it done quicker?
Well, I saw some reviews from Reddit, from Twitter, and it is actually true that for complex projects, Palantir is able to implement solutions in a much shorter amount of time. Palantir is often criticized for not being fully scalable, but the reality is that for how the kind of projects they deal with, they're not plug and play solutions. They need to solve a problem. If you could solve a problem with a simple plug and play solution, it means that it's not a real problem, right? So for instance, I read on Reddit a very interesting comment of a guy dealing with a big project on which also Snowflake was a candidate. And the difference was Palantir, they did it in 1/4 of the time using only Palantir solutions. Snowflake was basically the contractor dealing with other software and needed to assemble everything, which means longer to deploy and more or less reliant. I think the strength of Palantir is that basically they built a toolbox able to build other toolbox for whatever need, which means every problem could be solved with their own solutions, while others tend to have thin products, meaning that or you can deal with that precise problem or the solution is not working any longer.
Yeah, and Alex Karp likes to say a lot that they're 5 years ahead of everyone else, and talking's good and all. I think that IL6 clearance, that shows you that they're, you know, they mean business here. Their retention rate shows you everyone's sticking with them, it seems like. What do you think though? Do we have more examples and actual like use cases of how superior the tech is, how far they really are ahead of everyone else? I mean, is this something like Carpe said, that it would take the world's best engineers, you know, 5-10 years to replicate?
Well, I know it seems the easiest example and the most that is spoken about, but I think it is the essence of Palantir right now, and the essence of what we will see in the future, that is Airbus. Because what Palantir achieved with Airbus in around 5-7 years is basically building this platform that connects all the planes from more than 100 airlines. That platform connects data from all the sensor data and make all the participants of the network in a better position, because if an airline has information that some parts are more prone to fail after certain usage, or maybe there is a way to make the planes more efficient, they benefit too. The fact is that also Boeing tried to do something similar with Microsoft, and they failed. It means that to build the platform is not easy. Other examples that made me think is, do you remember when there was a partnership between Berkshire, Amazon, and what is JP Morgan, maybe? That disappeared. They were willing to do a huge consortium, if I remember correctly, in healthcare. Why it failed? Because both managing people, managing platforms is very difficult. What Palantir did with Airbus is actually potentially replicable, adaptable to each segment. So you don't see right now any other company building an operating system for a specific industry. What they did with Airbus, they're doing it with other companies like Merck. Merck even has two verticals, one for semiconductors, the other more in healthcare. This way, they will create a network that would help also Palantir achieve new customers. But these platforms make the benefit to all the participants of the network. And there are very difficult problems to solve, because you're basically dealing with an amount of data that is just immense, and everything needs to talk each other. Right now, there is only Palantir being able to achieve that. Simple thing. I was studying deeply a company called Amadeus that works in IT airlines. Like that is the big boss, a 20 billion company, is Spanish, focused only on IT for airlines. That company never built a solution like that. But to me, it's a signal, because, okay, you are specialized, you are born from airlines. This company was born from the internal departments of Lufthansa and some other airlines, born as a connector between agencies and airlines, but now is super focused on IT for airlines. This company didn't come out with a solution like Airbus, like Skywise.
In the same light, if I could jump in, Arnaldo, I sent you the tweet this week. Correct me if I'm wrong. There was a partnership between Mercedes and Microsoft.
I don't remember.
Yes, I sent it, and I believe that that's correct. But it was interesting I basically sent it to you because I'm saying, oh, they went with Microsoft and not Palantir, but we'll see how that plays out. That was my intent of bringing it to light. I said, oh, they went with Microsoft, maybe a contract that could have been given to Palantir, and we'll see how Mercedes does with that. So now we have the car. I love it that it's the car. I guess it's the car part. We'll double check, but the car part. So the Tesla competitor with the Palantir competitor teaming up and seeing what they could take on.
It would be nice because actually we know that BMW is working with Palantir. It would be nice actually to see these challenges. Also in the Army sector, you see that for the Titan, you have on one side Palantir and Unreal, which is like the sister, and on the other side, the legacy contractors.
I didn't know they were working with BMW. Speaking of which, there was Ether Squared. Did he release his fourth dossier? He did a Twitter Spaces this morning. I saw he was mentioning a new dossier. He said it was concentrated specifically on Foundry. Did you check in? Did you get any news from that?
Yes, and I invite you all to check Ether Square Twitter. There are a lot of code names, meaning that these companies are having tests at least with Foundry, and from what I understood, a lot of them are already active for a long time. So since when he noticed the links are there, he then tried again and they're still active. But the pilots tend to be a couple of quarters, so let's see.
What do you think about looking at Palantir's business model? Do you see any flaws to, I think other companies like Snowflake, if I'm not mistaken, are kind of more focused more on a niche. Is that correct? Like where Palantir's, they're really going for the whole market. And I think if that works out, yeah, they're going to, obviously it will work out very well for them. They'll dominate. But do you see any issues there? I mean, is there a danger in not kind of maybe going one niche at a time and just trying to branch out into everything all at once?
I'm not sure that they are actually trying to get all in once. They are actually trying to get the full pie, but with a clear strategy in mind, meaning that their first goal was to start from a very close, small niche of clients that potentially could fully exploit the full potential of Foundry, meaning that the first clients were all clients that could reach more than 100 million revenues per year. If you can achieve that, and I would underline that the biggest clients right now of Salesforce don't reach that level of commitment. Like the biggest Salesforce clients, if I remember correctly, are around 50, 70 million. And the Salesforce has clients like Apple. This is a clue because Salesforce is 10 times bigger than Palantir, more or less. And it means that the Palantir solution could be that extensive that if they work and if they achieve actually the scale to have many clients, the revenue potential is just immense. But to get there, you don't start and say, okay, now everything is open. You really did try to leverage on network effects. So how you do, you start very close, very small. You work a lot with clients that could achieve that scale. And then those clients, being leaders in specific vertical sectors, would become intrinsically the promoters of Foundry for all their clients, suppliers, and so on. So getting back to Tesla, what Palantir is trying to achieve, in my opinion, is trying to leverage the network effects so that they can gradually scale with marginal effort from the sales side. Gradually, they will open the platform to reach more and more clients, also not from the huge clients only, but rather than spending efforts like Salesforce, ServiceNow, they have a huge marketing hordes of salespeople trying to sell also to the smaller clients. They try a waterfall strategy, meaning we start getting the most important clients in specific industries. If we get them, every company that is smaller, less relevant, would be easier to get because you are already referred from Ferrari, from Airbus, and so on.
Exactly.
So
Arny, I wanted to shout out
that's free
Arny's
marketing.
Substack. Arny's Substack is he did a full article on this network effects using Airbus specifically as the example. So shout out to a Substack if you want to learn a bunch of stuff. On that, gentlemen, if you'll let me sign off, it was a blast. Got the 3 kids running upstairs, so I don't want to do any interruptions. But I think we spoke a lot. Vinny, it's great to get to chat with you and get your perspective on everything. So hope we do it again soon.
Thanks for coming on. Always a blast.
All right, gentlemen. Thanks so much.
Thank you.
I'm out. Ciao.
Bye bye.
Ciao, ciao.